But a lot of gold has been coming into the United States, a lot of it coming in from London. And the reason I think you're seeing a rush of imports is to get ahead of these tariffs, because the tariffs would apply to gold. And a lot of the gold that Americans might want to buy is going to be imported. America produces gold. We're the fifth largest gold producer in the world. Number one is China, right? They're pretty much number one in everything. Number two is Russia. Number three is Australia. Number four is Canada, and then the United States. But if gold demand really picks up, which it should, we won't be able to meet it with our domestic production. And so we're going to need imports. Well, if there's a 25% tariff, who's going to want to pay 25% more for their gold?
A surge of gold imports into the U.S., mainly from London, is likely an attempt to bypass upcoming tariffs. Since the U.S. is only the fifth largest gold producer, it relies on imports to meet demand. If demand rises, domestic production won't suffice, and a 25% tariff on imported gold could make it significantly more expensive. A renowned economist, investor, and financial commentator, PeterSchiff, explains that many traders have been long gold and short silver as a hedge, expecting silver to drop more if gold declines. This has stretched the gold-to-silver ratio above 90-1. Recently, that spread began unwinding, boosting silver. However, as gold dropped $45, silver lost its gains and ended flat. Typically, silver would have fallen more, suggesting some unwinding occurred. This sell-off also hit gold mining stocks. Despite this, silver remains undervalued relative to gold, making it a strong buy. PeterSchiff highlights that gold imports rise as buyers try to avoid potential tariffs. If a 25% tariff is imposed, gold prices in the U.S. will increase since foreign sellers won't absorb the cost. Investors are now urged to buy gold and silver before tariffs or price increases hit. Even if tariffs don't happen, prices are still expected to rise, making it a smart move. Institutions are already buying, and individual investors should do the same to stay ahead. As we present clips from the video, please like this video, subscribe to the channel, and turn on the notifications bell to be instantly notified every time we upload a video. Thanks for the support, and enjoy the video.
A lot of people, I think, have been long gold and short silver as a spread, thinking that, look, if gold goes down, silver will go down more. And if gold goes up, it's been going up more because the ratio has been moving in that direction. So rather than just being long gold, I'll be long gold and short silver. And in case the market goes down, I can make money that way too. But I think that it's been so stretched where the ratio has been more than 90-1. I was talking about this on the last couple of podcasts. I've been telling people, look, buy silver. And I still think that you should be buying silver over gold right now, right? Even though I'm a gold bug, silver is really cheap in terms of gold. And so it looked like we were getting a unwinding of that spread. And I think that's what happened. But then as gold started to go down, it cascaded, and gold went to down $45, and silver went from up $1.10 to unchanged, right? I think it ended up the day flat. Now, it still was a gain in gold versus silver because, normally, or not normally, but in recent times, if gold was down $45, silver would have been down $1, maybe more. Instead, it was flat. So I think there was some unwinding going on throughout the day. But that unwind caused gold to go down. Well, I would suggest the same thing for our customers at Schiff Gold, right? Don't wait to buy your gold after there's tariffs. That's the worst time to buy it. It's going to be tough, So if you want to have physical possession of gold and silver, buy it now, not only because the price is going to go up, but because the tariffs may go on. And of course, the gold producers are not going to eat those tariffs. Tariffs for sure will go dollar for dollar. So if Trump imposes 25% tariffs on gold, any gold coming into this country is going to be marked up by $25. Otherwise, it won't come in because nobody in Russia is going to sell gold to America for $1 less than they can sell it in Europe, right? The price is the price. And so if we want to tax Americans $25 to buy Russian gold, then they're going to pay $25% more than what the Europeans are paying for the same gold. So the idea is to buy it now. And the same would be true with silver. Now, I guess if you're buying like junk silver, obviously that's not imported, but that's, when you're buying junk silver, that's a used product, right? By definition, right? You're buying it from somebody who's selling it. But if there's a 25% tariff on silver coming in, that's going to cause a big premium in junk silver, because people buying junk silver, or anybody who's buying, a used silver product that's already in this country, right? They're going to be able to charge more because it's not going to be competing with the new products that are being imported into the country. So the big guys, the institutions, are trying to jump ahead, and they're buying their metal now. I would suggest that, my followers, customers, Schiff Gold, do the same thing, except more so with silver, right? Buy your silver now. Maybe there'll never be tariffs. Well, it's still cheap. You should buy it anyway. Even if you didn't have the threat of tariffs that were going to make physical gold and silver a lot more expensive, you'd want to buy it anyway. So now you got another reason, right? You can kill two birds with one stone. You can get into silver before the price goes up, and you can beat the tariffs. And if it turns out there are never tariffs, well, then you still did the right thing by buying it. And the fact that we did get this sell-off, it may have been off to the races on Friday. After it was up $1, maybe it would have gone up 2 or 3, and who knows? The fact that it came down, that's a good thing if you want to buy some silver. I had no intention of selling any of mine, so it doesn't matter to me. And I got a lot of followers who would like to buy more silver. So I'm happy when anybody is dumb enough to sell it, because that means my clients.
PeterSchiff exposes that the U.S. recorded a record-high budget deficit of $711 billion in the first quarter of the fiscal year, surpassing deficits seen during COVID-19. Despite claims of a strong economy, deficits are typically lower in periods of growth, suggesting the economy is actually in a stealth recession, propped up by massive fiscal stimulus. Government spending has surged, with a 40% increase compared to the previous year's first quarter. In fiscal year 2023, the U.S. spent $1.13 trillion on interest payments, more than on national defense, and this number is expected to keep rising. PeterSchiff points out that with current debt levels, interest payments add $1.2 trillion annually to the national debt. Even if all other expenses were fully covered, the government would need a $1.2 trillion surplus to break even. The debt burden is growing rapidly, and by 2026, annual interest payments could reach $2 trillion, making it the most significant expense in the federal budget, surpassing Social Security, Medicare, and Medicaid. The U.S. is in an unsustainable fiscal situation with no clear solution. Now, let's shift our attention towards the interview.
Tuesday at the very end, because I kind of forgot to mention it, and so I talked a little bit about it. I talked about the deficit for the prior month, which was a huge increase, January year over year. But we actually got the first quarter of the new fiscal year completed. So we have 3 months of the fiscal year. And the deficit in 3 months, the official deficit, was $711 billion. That's a record. So we've never had a quarter where we have had a budget deficit that large, including during COVID. Amazingly. So, supposedly the economy was really strong in the last quarter. So we have such a strong economy. Why do we have the biggest deficit in any quarter in history? I mean, normally, if the economy is strong, the deficits are smaller, right? They get bigger when you're in a recession and they're doing all this stimulus. What that proves is that we were in a recession. We were getting stimulus. And I pointed out that the fiscal stimulus that we've been getting has been the most that we've ever had. There's massive fiscal stimulus because this is a stealth recession that nobody has acknowledged. The voters acknowledged it by sending Kamala packing and electing Donald Trump and the Doge boys to go to Washington. But that's a 40% increase, too, for the first quarter of the prior fiscal year. Also, last year, fiscal 2023, we spent $1.13 trillion on interest. I mean, by far a record, which we're going to beat this fiscal year. but more than we spent in national defense. The only program that's more expensive than interest on the national debt is Social Security. And that's going to change. I think by next year, we'll be spending more on interest on the national debt than we spend on Social Security. And then we'll be spending more on interest on the national debt than we spend on Medicare and Medicaid combined. It's going to be the number one line item in the budget, and there's no stopping it. Think about it this way. I mean, right now, I'm sure we're doing $100 billion a month, at least, in interest on the debt. $100 billion a month. What that means is that the interest on the debt, because of course we're running a budget deficit, and so we have to borrow the money to pay that interest. It's not like we got the money. So the interest on the debt, the money to pay that interest, has to be borrowed, just like a lot of other money is borrowed. So we have to borrow another $1.2 trillion a year to pay the interest on what we've already borrowed. So the interest on the debt alone adds $1.2 trillion a year to the debt. Now, we never even had a $1 trillion budget deficit until recently, right? Until, was it COVID? Or when did we have our first $1 trillion? It just happened. Now, we're going to have a $1 trillion deficit every year, even if the budget is balanced, right? Even if the government balanced the underlying budget.
The rising national debt, surging deficits, and potential tariffs on gold highlight the U.S. economy's growing financial pressures. While investors seek to hedge against uncertainty with gold and silver, government spending and interest payments continue to spiral. As economic conditions evolve, will staying informed and proactive in financial planning be crucial? How might rising interest payments on the national debt impact future government spending and policies? What factors could influence the gold-to-silver ratio in the coming months? Share your thoughts on Schiff's insights in the comments below. Also, remember to like this video, subscribe to the channel, and turn on post notifications to stay updated with more content like this. See you next time.